Welcome everyone to Which Stock to Trade. Hopefully you can see me, hear my voice. I'm going to share my screen with you in a minute to show you something I call I'm going to show you something called the overnight trade. And this is a trade where you put it on either right at the start of the market or just before the market opens, and then you just hold it all the way through till the next day. So it's more than 24 hours. So it's not a day trade. That way you don't have to, get hit as a pattern day trader. And therefore you can make this trade with any small account. Of course, you can do this with large accounts too, but you can also do this with small accounts, and particularly if you're using low price stocks. So I'm going to try to give a few of those in the weeks to come, starting with today. One trade that I've been watching and I think is still a good trade for this particular purpose, and you'll see why. There is a company that you probably heard me talk about called Splash Beverage, ticker symbol SBEV. And so far, I have made 3 profitable trades on it, and I expect to make more. And so what I want to do is show you some of the reasons why I think this particular trade, this particular stock, would also work for something that I call the overnight trade. And I'm just trying to get my screen going here and share it with you. Okay, and not able to get that, so I'll go here. Let's see, have we got the screen yet? There, how about that? Okay, so if you compare, let me get rid of these. Splash Beverage to a lot of other stocks, of course, it looks fantastic because it's gone from $1 to $5.50 here in the last, 6 weeks, 4 weeks. But why is it that I say it has the opportunity to keep going? Well, if you look at the news on this stock, then you can see that they've signed a lot of distribution agreements for an energy drink called Tap Out that they sell. And this is a beverage company that, like Coca-Cola, doesn't do its own bottling or anything like that. It just designs and creates syrup, and then they sign distribution agreements with bottling companies and with sellers, and they've got some big ones. They've got Walmart and Kroger and so forth. So they have a couple of different products. One is Tap Out, and the other is Polpolico. Polpolico? Yeah, I'm going to sound really silly to somebody who actually knows what that is and drinks it. But the main thing is it's a new drink. Now, is this new drink? I mean, there's a new drink every day. Is this new drink going to take the market by storm and sell? And I mean, who knows? I don't know. The interesting thing is that the market thinks this company has a chance now. The market used to think just a little over a month ago, this company was headed for certain failure, certain extinction. When you look at this price, it was up here around $6, up and down, and then this long slide from the moment it did this stock split, which is kind of interesting. It's a reverse split, actually. So is that right? Yeah, reverse split. So reverse split usually means company's in trouble. They did it to keep from getting delisted, probably getting taken off of the NYSE or NASDAQ, 4 letters, probably NASDAQ. And companies will do that. They'll reverse split their stock because they don't want to be under $1. And if they're under $1, then they for a lengthy period of time, then they have to leave the index or the exchange. So when they did that, that was kind of like the signal of, hey, we're having troubles, and the market responded by just selling off like crazy, getting shares down to $1 or under. And from that point on, all of a sudden, boom, because they started announcing distribution agreements with Walmart and various other companies. And so now the question is, will that company's product sell? It's fascinating to see here. I mean, the big run up is, oh, I guess this company really wasn't such losers, and so it comes back up to this price, pre-split price, right? That's all about. And then the selling. People that were holding it way back there said, okay, finally I can get out of these stinky shares I don't want to be in. So all those people sold out, but since then, it's done nothing but go up. So I think this is the market's way of saying, hey, that drink doesn't have to sell much. It can sell just a little, and this company could make money. So this company hasn't made money on its earnings for, you go back, they're just losing money. Earnings are coming up probably here in another week or two. And if in fact they are losing less money, that's going to keep their interesting. If they're actually come out and somehow say they made money, that would be, the stock would jump. I think there's absolutely very little, I'm going to say no chance that they are profitable yet, because although these agreements have gone in place, they haven't really started selling, at least not in quantity yet, so far as anybody knows. But they might have actually started selling, and they might have, their test market activity might have somehow yielded good results, because they're breaking out of old highs and continuing higher, and in fact are opening up here, up at this price around 547. So it's above $5. It was this penny stock below $5, and now they're above. And so if all of a sudden this stock became a company where it was making money and it was definitely not going to fail because their financials were going to keep them in business and they'd be stable, then this stock goes from being a $5 stock to somewhere between 10 and 20. And who knows past that, right? But stocks that are priced at $5 a share are stocks that people think this company could fail. If the market thought the company was not going to fail, that they for sure had a future, and that they were going to be making money, then it's a $10 stock. So the jury is out, and the fact that it made it over $5 is a huge win in their way of thinking. All right, so with this idea, we've got the possibility of we're looking at a stock that will be trending its way up to $10 somewhere along the way. Now, a lot of people like to just sort of buy and hold these stocks forever. But you got to realize what you're doing when you do that, especially when you're talking about a low price stock. If you look at this company and you say, I'm going to buy it. I'm going to buy it at $5.50 a share. Okay, great. When are you going to sell it? I don't know. Okay, then what that means is your stop loss is effectively at $0, 0 cents. And you're risking all $5.50 per share. That's the way you're playing the game. Because any company could fail, and a company that is, $5 or less has a lot higher probability of failing than it has like a 90% chance of failing over the course of the next year or two. So stocks that are priced that low are typically terrible investments, but they're fantastic trades. All you have to do is pick out a stop loss, and that's anywhere from 25 to 50% of the stock's price, usually. And I mean, just a simple rule of thumb would be 50%. If you don't know anything about the stock, you don't know anything about the industry, you don't know anything about the company, you just say, well, it's $5 a share and I can buy 10 shares because I have a $50 account. If you wanted to do a thing like that, then you would want to make sure you just set your stop loss at like 50%, 25, $2.50. So you would be risking effectively $25. Now, if you only have a $50 account, risking $25 is a terrible strategy. But if you had $500 and you were risking 25 of those $500, then now you're risking 5%, which is still pretty high. But if you have a small account like that, that's probably about where you want to be. And that's where we'll start with the idea of the overnight trade. Now, anything more than that, you want to try to risk, between 1 and 3% of your account. And the larger your account is, the smaller that percentage gets. Kind of weird, but yeah, that's the way you play it. And so what is the overnight trade? Well, the overnight trade is the idea that you take a stock like this that's got a good story behind it and a good trajectory, and you say, I'm going to try and just capture as many, 1, 2, or 3 day trades. Sometimes might take more than one, but you're hoping to just get it overnight. I'm going to try and capture as many of these as I can. So for my part, I got in this trade right here after this gap, because gaps are a big useful indicator of a good strategy. Doesn't mean they're going up for sure. It means they're slightly 5 to 7% more likely than random that they're going to continue higher. The tiny little edge, that's all. I didn't know this was coming, but that's what came. I got in here and all of a sudden, boom, up it goes. And I managed to sell up in this area. And then I bought it back at a lower price and sold it again. And I bought it a third time in here and sold it up here. So now I'm waiting for my fourth opportunity. And I'm loving the fact that this is red, because there's the potential for it to pull back. What we're going to notice about this stock is that it has pushed past $5. And just Friday, the last day it traded live, it stayed above it. It opened and then closed. So now we're probably going to see it try to come back and test $5 or come close to it. If it never comes back and touches $5, that's really strong, right? And so what you're looking for is a stock like this that has the ability to just sort of fluctuate up and down. And you want to take a certain amount of risk in the stock and a smaller amount of profit from the trade. Now you could say, well, are you kidding? I want to be in here and I want to be in there and just hold on to it and have it go up. Great. You're welcome to try. Your chances of actually hitting that kind of a trade are less than your chances of getting struck by lightning. I mean, numerically, that's the case. These kind of trades do happen, but they're super, super rare. How about just the fact that, it jumps up and then it moves some more? That is much, much more frequent. And so what we do is we look for a trade that has moved big, but when it comes back, it sort of holds, and then there's the chance that it continue going higher. We're just going to grab some of that higher, and we're going to keep grabbing pieces over time, and let them stack up instead of trying to get the one big hit. Right? You can equate it to a gold miner who's swishing a pan around. Right? You go out there and you try to mine for gold, and you're hoping to find this large rock-sized nugget of gold. One nugget that you can go and sell and walk away and say, that's it. I never have to work again, right? Or you could just simply try and pan a bunch of flakes, and you get a few flakes every day, and then after a while, you've got several ounces of gold stacked up in the flakes. It seems counterintuitive to look for the tiny pieces, but they add up over time, and that's the idea of the overnight trade. You don't really care about where it's going to go. Is that stock going to go to the moon or not? I just care that it goes up a little bit. I just want to profit from the fluctuation. That is the constant in the markets. So the overnight trade using a stock like Splash Beverage would look like this. I see this thing right where it is now. I want it to come back a little bit if I can. Or I don't even have to wait for that. I could just say, what, buy it right at the market's open, wherever it opened today. And that was 546. So if I were to have done a thing like that, then what would I do? Well, I want to put my stop loss wherever the breakout was most recently. And so I'm going to come back here and say, Yeah, 480 or 479, somewhere in there. Yeah, 480. We'll go 480. So my stop loss is here. If it comes down to there, I'm just going to sell it, take my loss. It's not much of a loss, but that gives me the chance to try again, right? And if in fact I make that entry there, then what is the distance? 541 to 481, that's 60 cents, right? So all I'm going to do is try to target 30 cents higher than where I bought, from 541 to 571. That is the overnight trade. I just want to see this thing go up a little bit. Now, it might be that it gaps up and it's much more than I expect. It opens up at $6 the next day. Fantastic. But that's not what I'm banking on. It might be that somehow I pan and I get a nugget. I'm after flakes, but I get a nugget. Yeah, that is great. But all I'm trying for is that 30 cents while I'm risking that. That gives me a 66.7% chance of winning this trade. And just by default, just by randomness, because I'm risking 2 to make 1. But if I have something, if I'm looking at stocks that have a little bit of extra upward movement in their trend, a greater probability of continuing higher, then when I do this, I get a little bit better than random. In fact, I've been doing trades like this now for the past 2 months and tracking them. And my win rate has consistently been 71%. So the random, I mean, I've made, what are we talking about, 40 trades now? And the by randomness, I should be hitting 66.7%. Risk 2 to make 1, you're going to win 2/3 of the time. But I'm actually hitting wins at 71% of the time. Now, you might think that difference, that 5% difference, is trivial, and it sounds small, but it is enough to make really nice gains. In fact, at the pace I'm going, weirdly, I could potentially double my account in a single year. And that's making about 20 to 30 trades every month, most of which are not overnight, are not intraday trades. They're, I buy it once and I hold it till the next day, 2, 3, or 4. But every day I'm looking for one new trade. So the overnight trade is a setup like that. The first one I'll tell you about is Splash Beverage, and you can get it there. Optimally, it would be better to go, somewhere down in the 20s and then go 60 cents lower and 30 cents higher. You really like that because then all it has to do is get back up to, near where its old high was. Okay, now, is that the only stock you could do that with? No. Here's another one, Exxon Mobil. So any of the oil company stocks, this one's higher priced, right? So if you have a $500 account, then you're only going to be able to do this with maybe 5 shares or something, but you can still do it. If you have a $10,000 account, you could do this with 100 shares and still have this work, right? Is that right? Yeah, I think so. Yeah, it is. So what you do is the same kind of thing. Now here, this is run up and it is, it made this sort of bounce. It's opening and falling right now. I think that either right now or anywhere in here, maybe even a little lower, is a great place to start. The idea is same kind of thing. We're going to risk 2 to make 1. How do we know how much to risk? Well, I didn't show this on the other chart because we're talking more on a breakout, but it doesn't matter what stock you use. You can always use the average true range to tell you where the best range for your setup should be for an overnight trade. Every day, on average, this stock moves $2.13. That's the average true range, okay? And so I say, all right, if that's the average, what it's been doing the past couple couple weeks or more, then I'm going to use that information to say, let me make a purchase and put my stop loss just a little bit more than this. So 215, I'd go to 25 or so. We're talking about 78, 27 is what's the current quote? 78.44, right? So I would just go 76.14 or 19. So if I put my stop loss at 76 and change right in there, say, and then I set this just $1 higher. Whoops, I have both of them selected. Set that just $1 higher. We'll change this to blue for the entry. So if this is our entry, and that's $2 to the downside, $2.25, $2.30, something like that, and this is $1.15. Look how easy that is. All we have to do is get back up to where we were recently, not even its total high, right? So just boom, we would see the stock come right up there, and that's it. We're done. And then we come back the next day and look for another opportunity of similar setup. Oil, the price of oil has been going higher and just sort of trending higher, and it's pushing all oil stocks higher. So I used Exxon Mobil, kind of the largest and most prominent oil company out there, but you can use any other number of them, ConocoPhillips, Phillips 66. See, they all have this upward trend. Schlumberger, which is, makes equipment for drilling and services for that. There's also small stocks which are in the oil industry, like they're struggling to stay afloat, but that's the industry they're in, is oil exploration or oil production or whatever. So if I come here to there it is, EGY. This is an energy stock that is only $5 a share. And just recently, similar to Splash Beverage, came to this level. And so it was down here at $3, and with this trend in oil, up it goes, right? It went above 5, and look what it's doing, coming back to retest $5 a share. So this is a great indication where you could say, all right, what if I pick the stock up here and then I use the average true range? Let's see, it moves 35 cents a day. I want to be, because it's low price, I actually might want to go to ATR 535. That 535 would put me at 515. I just want to go a little bit low, larger than that. So yeah, here it broke 5, sort of retested, passed its test because it never went back below 5. Now it's hit 550, retesting 550, right? I could set my stop loss right there at 502. I think that would be probably a good shot. It's more than 1 ATR, 50 cents, but it's less than 2 ATR. So so that kind of makes sense to me. So now I've got about 48 cents. All I got to do is get 24. And so I'll put this 24 cents higher. 74 would be right in there. And that is where that's where I would try to take profit. So that's it. That's the setup. This is an oil company stock that's only $5, and it's having this strong trend up, just like oil is. How did I find that stock? How can you find stocks like that? Real simple. You go and look at FinViz or any screener that'll do the same kind of things. FinViz is an easy one. It's free, has a ton of ads. Just beware. And when you go to their screener function, you can specify industry, and on the industry, you're going to look at oil and gas, and there's several different oil and gas ones. And this one here, E&P, is like exploration and production. And so this is trying to find wells. This is, I found wells, now I'm trying to drill wells, stuff like that. So I'm going to go E&P because that's where the low cost stocks tend to hang out in the energy sector. And but you could really do this same thing with any of the sectors. And then you sort them by price, looking for the lowest price. And right down there at the bottom is Valco Energy, right? You also want to deal with stocks that are trading close to, an average of volume of 1 million a day. So if I go over 1 million and I have it sorted by price, now I know I'm dealing with stocks where there are a lot of traders in there. I'm going to be able to get in, be able to get out. And then you just go down the list and you look for stuff that's uptrending. Right now, you've got to find stuff that's uptrending. Otherwise, see like this here that went up and is just going down and down and down. I don't know what the deal is with this company, but the price of oil is going up. You're an oil company and you're going down while oil's going up. Something's wrong with you. Don't touch that stock, right? So leave behind any stock that looks like that. Well, the first one down the list is this one, GTE. It's $1.29, and that's had a really nice move coming up after $1.10. This one now downtrending. This one going up. REI, yeah, that's another good one. But let's go back to this one here, GTE, and then it's the same kind of setup. Overnight trade would be, I come and I look at GTE and I say, well, where is it right now? Oh, it's moved up. All I need is a little bit of a pullback, maybe somewhere here into $1.20. What's my average true range? 7 cents. So the lower you get, the more likely it's going to be to try to use 2 ATRs instead of 1. In this case, I'm going to use 2 ATRs, 14 cents, and then try and take 7, right? So I'd try and pick this up in the 120s and set 14 cents stop loss. Maybe let's suppose I go 124, I'm at 110, and then all I got to get is 131. Boom, I'm done. And I keep going. Now, sometimes if you're playing this game with these low price stocks, sometimes what happens is, like we saw with that Splash Bev, huge bar, right? Sometimes you get really lucky and it just takes off. And when it does, you don't need to sell it. You just let it keep going and going. And then when it finally starts moving down a little bit, then take your profit and wait to do it again. So that's all sorts of ways to play that. But as long as you get just a little bit more, in other words, you get that, your risk 2 to make 1, as long as you get that 1 and you keep doing that and you win 71% of the time or better, then this turns out to be a very effective trading strategy. So in the weeks to come, I'm going to try to give you ideas that work with this style of overnight trade in a risk 2 to make 1 setup, with the intent that they're going to try and work into a trade that would have these kind of statistics. And let's keep track of them going forward. We'll use Splash Beverage as our first one. And if in fact we can pick that up today in the 520s, that's what we'll do. We'll move that up. Yeah, 529 will be our opening, and we'll just go ahead and set that in a paper trading setup so we can see what that's like. 529, and the take profit, or the stop loss, is going to be 60 cents lower, and the take profit is going to be 30 cents higher. And time in force all week. So we'll let that thing go all week and see if we get put into that trade. And if we do, those are the circumstances we will get taken out with. And we'll just do a 100 quantity unit just so that we can mark it. And there it is. All right, so it is not in. We're not in that position. It's going to have to come down to that price, 529, somewhere over the course of the week. And then if it does, it puts us in. Next week, we'll come back and do another one, and we'll keep track of them, see how they go. Until we do this again next week, take care and trade well.